And we are back, and there is a recovery happening right now. Right now, Bitcoin trading at 36,708. And we are seeing other signs of a recovery, some real encouraging signs of a recovery. Now, is this recovery real? Or is this just going to be a fake out? And if we are getting a recovery, is this recovery going to lead to a dead cat bounce, or is the market going back on track? Those are the questions that we're going to be answering right here today. And I don't know if you guys saw it yesterday, but yesterday the US stock market gave us one of the most positive signals we've ever seen. It went from being down about 500 points to closing all the way back up. And that's one of the signs that we're going to look at today. So big questions answered here on the show today. Is this recovery real? Where to from here? And is it safe to be buying? So let's get this show on the road.
Get the fuck out of bed, bitch. Go. Get up, and they got go. Time to wake up, bitch, get up. Get up, get up.
All right, welcome back, guys. We are seeing a little bit of a recovery. Here we go. Get out of bed, bitches. Get up. 36,807, and this is one day before the FOMC meeting, or actually today is the first day of the FOMC meeting, and tomorrow we're going to get the results, or they're going to talk to us about the decision that the Fed makes at this meeting. And this meeting is possibly one of the most important meetings that the Fed has ever held, because wow, have the markets responded in anticipation to what they believe that the Fed is going to do. And today we're going to look at whether the response has been rational, or whether we've had too much of an irrational response, and now it's time to get back to normal business and the market's coming back into rationality. And that is why we're actually seeing some kind of recovery. And let me tell you that I've taken some bets that the market has been irrational, and that this rundown, this correction has overcorrected, and that we may see signs of a recovery. In fact, yesterday, after the show, I actually placed a bet on the NASDAQ. I took a bet on the NASDAQ. I actually took the bet I took the bet at 13,800 or something. So it was about there. That's when I took the bet that the NASDAQ was going to recover. I had an unbelievable recovery. I've given back some of my gains. Now, where did I get the information from? Well, yesterday, I don't know if you guys have been following the Crypto Banter website, but Gareth Soloway was on our show. You guys remember Gareth Soloway came in and he said, look, he's betting on a NASDAQ bounce. He believed that the market had corrected too much and that there was going to be some kind of bounce. If you didn't see that article and a whole lot of other articles are obviously posted on the Crypto Banter website. If you dig into that, he basically showed us that chart where he drew the top of the one to the top of the other and the bottom here to the bottom here. And he said, look, it logically kind of has to bounce. And he said that there was a bounce. So based on that, I put on a couple of bets. The first thing is I placed a big bet on the NASDAQ, which I don't normally do. I don't normally take leverage positions on stock market indices, but I just felt that the market had run down too much. It had gone down 17%. And for me, 17% in a couple of weeks from an all-time high, all based on what they think the Fed is going to do, just made sense to, well, what's the word? Take a bit of a bet. And I took a bit of a bet. I also went a big bet on Bitcoin. I bought a lot of Bitcoin yesterday, and I bought a lot of altcoins in anticipation of some kind of recovery. So far, so good. So far, it does seem like my bet was right. So today, let's look at what made me think of taking that bet. Let's look at what else is on the website today. I know there was an article that is being published right now. So Miles Deutsche wrote another article for us, and that is a major Fantom update. And in this Fantom update, they actually updated the protocols that we're going to get included for the snapshot to include Tomb Finance and to include tariff, which is a big thing. And this, I think, actually was because of Miles Deutsche's appeal to Andre Cronje. So absolutely amazing. There is an article coming out in a few hours around the 6 best gaming token to buy. You got to get into that because I think gaming is going to recover first. When I looked at our portfolio today, try and get this to display correctly. You know, CoinGecko. When the market moves, CoinGecko is like almost impossible to use. Let's try that again. Take a quick look at our portfolio and see what has recovered. And I did see that some of the tokens, that there was an aggressive recovery from some of the tokens. Let's click on that and see what happens. Okay, now the problem is when you want to get it back, that's when it starts to get angry with you. Okay, so what we'll do is we'll cheat the system and we'll go all the way to the bottom and we'll start at the bottom instead of the top. So the recoveries, you've got gaming, Guild of Guardians, you've got Charlie 3 recovering. You've got Tomb shares, T shares recovering. And the reason why T shares is recovering is because if you look at Tomb, which I'm sure we'll see over here, Tomb is at 240 and Fantom is at 244, which means that they 1.5% away from peg. And remember, when it hits peg, then the T shares start to earn a yield. Spirit Swap recovering well, Vader recovering well, Dopex, one that we don't cover enough, which it's a derivatives exchange. It's a decentralized derivatives exchange. Very, very good buy. In fact, the reason why I thought this was such a good buy is if you look at Dopex and you look at it in the last 90 days or the last 180 days, what you look at, you said that the top here was at about $4,000 and it's trading at about $1,700. Now, when was the first time that this token hit $1,700? The best is to go look at history. And you're kind of saying, look, October 14th. So you've gone back to October if you're buying this. And then you take a much longer view and you say, okay, more or less what price range has it been at? And it's been between $1,000 and $2,000. So something like that is a major blue chip and so important is something that you maybe want to be looking at. And we'll talk about a couple of other buy lists that I've got. Also today, as I mentioned on Twitter, for those of you who don't follow me on Twitter, CryptoManRand on Twitter, I've got a Coinbase list. I've got a list of tokens that Coinbase is going to list, and I'm going to actually display my source. I don't actually usually display my sources, but I'm going to actually display my source with the Coinbase list. So that's another thing that's going to happen today. What else? Should we get the show on the road? What do you say? All right, so let's take a quick check of where we're at. We're at 36,649. And I guess the truth is that this market's caught everyone off guard. And I think this, that there was a tweet that I read earlier today, which kind of summarized it. It's from Arthur Zerix. Do I follow this guy? I should follow him. Let's go back and just quickly look at the tweet. It says, throughout my 5 years of crypto investing experience, this is the first move that caught most pros and whales offside the most. Was not expecting a 60% drop from the peak without a single 20% bounce. Massive supply and demand driven sell-off without significant liquidation cascades. So this has really been one of those events that has really caught people off guard. We were all expecting the market to have this blow off top. We were all expecting the stock to flow model to basically take Bitcoin to $135,000. And we were all drinking the Kool-Aid of the Plan B, the Plan B Kool-Aid. And the reality is that most people, even the whales, got caught off guard in this very strange correction that happened. You had a correction without a blow off top. Everyone was expecting this blow off top. You had the liquidation, the leverage is still there. So even after this whole correction, the leverage is still very high. And even the biggest whales, the smartest investors in crypto, have been completely caught out here. So if you look at Suzu, he says, I was undeniably wrong about how much crypto could fall from the macro contagion. I remain bullish on the space as a whole and think that the most important mega trend of our times. I joined crypto Twitter during 2018, and I'll be here with you guys in the coming years, bull or bear. A lot of people got caught out in this in this thing. But not everyone got caught out. In fact, my friend Matty Greenspan brought up a tweet. And if you look at this tweet was from November 19th. And he said a 50% retracement would bring us down to 33K. That would make for an amazing entry price, to be honest. I mean, that was quite a prophetic tweet. We were all here, we were all expecting this 100K. We were all talking about this double top or blow off top narrative. And the truth is we never got it. And this probably teaches us a good lesson. And the lesson here is to try and identify the narratives as much as we can and to ride the narratives as much as we can, but not to get sucked in to the narratives. Because sometimes what happens is we get a little bit too carried away in the narrative. Now, the same thing happened to me in 2017. In 2017, I remember that I got caught up in the narrative, and I got caught up in this narrative that blockchain was going to change the world. And I rode the 2017 cycle all the way up, and then I rode it all the way down. In 2017, the technology around blockchain wasn't even developed. And here we were riding on trillions of dollars or just under $1 trillion market cap. And the same thing happened to a lot of people here. They got caught up in the narratives that were created. And the problem with the narrative is that it gets created and you start beating the drums and everyone starts beating the same drum. And everyone on Twitter starts talking about the stock to flow model. And everyone starts talking about 100K and 100K and 135K and 98K in November and 135K in December. And the reality is that we start to believe the narrative when we get too carried away in the narrative. And I think that's what's happening in the traditional markets right now. Right now, the traditional markets, believe it or not, are more bearish than they were at the bottom of the COVID March 2020 correction. So investors naturally have started to believe this narrative. And I think what's happening now is that investors have completely lost perspective. We need to get some kind of rationality and some kind of perspective. The rationality and the reality is that the markets last year, if you look at last year and you look at the major markets, so let's look at the NASDAQ and let's look at the markets for last year. You're talking about a market that went up from here, so from 12,000, just under, so let's call it 12,000, all the way up to 17,000. That's about a 40% increase in 1 year. And now that the Fed is talking about maybe tapering and reducing the amount of money in the economy and maybe increasing interest rates in March, the market has completely overreacted. So just like we overreacted to the narrative of the 100,000 and the blow off top, the market is now overreacting to the potential of negative news. And they are so overreactive that now the investors are more bearish than they were in March 2020 on the traditional markets. In crypto, the fear and greed is at 12. And I think we spoke yesterday about the last time that the fear and greed was this low. There's been very few times that the fear and greed index was this low. One of them being the March correction, and then before that, at the end of 2018. That is when the fear and greed index, when investors were this skittish. And already the markets have gone down. I mean, if we put things into perspective, the NASDAQ is down by 17% from top to bottom. So you're looking at, you take the top here and you go from top to bottom, 17%, 18%. And the Dow Jones, which is the more industrial weighted average, is down 10% from its all-time highs. And still investors are more bearish than they were in March 2020. The they call this the American Association for individual investors, because you need an association for individual investors, because God forbid you should have individual investors that aren't part of an association or a union or something. But what you're seeing now is that they are also at a lowest sentiment in 10 years. In 10 years. Mike Arrington posted yesterday, said a message from a very large non-crypto hedge fund says, this is the kind of panic we discussed that we had yet to see. This is what it feels like to me. So the markets are absolutely panicking in anticipation of this Fed meeting. And the outcome of the Fed meeting is probably that they're just going to increase rates ever so slightly and start tapering the balance sheet, which is something that we probably should have expected. The Fed couldn't just continue to pump money into the economy and pump money into the economy and pump money into the economy and leave interest rates at zero. So it feels to me like the markets are absolutely overreacting, so much so that I think even now McDonald's has joined in the fray. And they said, how are you doing, people who run crypto Twitter accounts? So it does feel like the markets have absolutely started to overreact, and that we should probably start seeing some kind of rationality. And we saw the first part of that rationality yesterday when the NASDAQ did this crazy massive move. So let me go back to the 1 hour candles for those of you that haven't seen them, but the NASDAQ made this huge move where it was, let's try and find, yesterday was the 22nd. So it went from about there, 15,000, and it went all the way down to 13,700. But then it recovered to 14,500. And that kind of shows that the market realizes, hold on a second. We have been acting irrationally, and we need to come back to some kind of rationality. That's what happens when you see these big reversals. And the same thing happened with Bitcoin. Bitcoin was down at about 33,000. If you look at the candles over here, 33,000 exactly. And now we're trading about 10 or 15% higher. We've actually just touched 37,000. So the market said, look, we're acting irrationally. We have overreacted. We shouldn't have gone down 17% in the NASDAQ and 10% on the Dow Jones. We probably should have expected some kind of tapering. And now the market is starting to get this relief rally or this relief bounce. And the question is whether this relief bounce will continue. Charlie Bilellos says the S&P rated 4.4% from its low of the day to close at 4410. That's the largest intra-day rally we've seen from low to close. Then you got Bloomberg. Bloomberg says Monday's wild stock market ride saw the S&P 500 lose more than 10% from its record high. It closed up 0.3 after sinking as much as 4%. So there you've got this aggressive buyback, this aggressive knowledge. Guys, just smash the like, because I forgot to tell you to do it in the beginning, and I can see that a lot of people are joining the stream very slowly. Also, when we do get to 5,000 likes today, we're going to do giveaways. We haven't done giveaways for a while. I've got a whole bag of giveaways. Smash the like, subscribe to our channel, join the family. I forgot to do all of that when we started, probably because I was so excited to get the show on the road. Okay, so Bloomberg says Monday's wild stock market ride saw the S&P 500 lose more than 10%, recover. Look at that, down 4%, bang, recovers. The tech-heavy NASDAQ has fallen 12% this year so far amidst a broad sell-off in tech shares ahead of the Fed's meeting. The small cap Russell, look at this, the small caps have fallen 21% from their November highs. So the market has already corrected into what we think is the most important Fed meeting of the year. The markets have already corrected and shown some kind of correction. We also saw something very interesting, which Will Clemente pointed out, and that was that yesterday's recovery, which happened on the market, was all around high volume. We had a huge volume recovery. We didn't even see this volume in 2020, in March, April 2020. We saw the highest volume day in a while, which just shows that when people feel like the market has been too irrational and too oversold, then the buyers come in, and the buyers come in big. And that is what we're seeing now. Also, to show you this, LeClair says the lower that risk asset plunged, the lower the market's expectation of a Fed rate hike in 2022. So it's almost like the lower the expectations of getting a rate hike, the lower asset prices went. Again, showing that the market was irrational. If you're expecting a lower rate hike, then prices should be higher, and that wasn't what's happening. It just shows you that people were acting irrationally. VIX is blown out. Indices are pummeled. Crypto is decimated. The S&P is at a key level for a double bottom. Microsoft earnings are tomorrow, which is 6% of the index by fund. Market morale is defeated. We have been decimated. But Gareth Soloway came on the show yesterday, and he said that he sees a short-term bottom. And I think I agree with that sentiment. It just feels like all of these signs are showing us that the market has overreacted in anticipation of this Fed meeting. And the Fed meeting tomorrow is one of the most important meetings that there's ever been. I mean, Jerome Powell's walking into that Fed meeting he's trying to balance the strength of the economy against inflation. On the one hand, they've got rampant inflation, which they've got to have under control. But on the other hand, Jerome Powell can't destroy the markets. And if the markets are down already 10% and 17% on the anticipation of what he's about to do, imagine what happens if Jerome Powell does something that or becomes too aggressive in his attitude. And I think this tweet sums it up pretty well. It says, BTC popped $4,000 on trader speculation about the softer Fed. I've been tweeting about this. Watch the Fed's language. If hard dovish pivot, meaning a more favorable Fed, BTC new all-time high this year in play, would mean utter loss of Fed credentials and runaway oil. So probably a softer pivot, but hard pivot comes at some point. There's also another thread, and that's from Tedtalksmacro. It says, last week, market participants positioned themselves for the worst ahead of this week's FOMC meeting. Position themselves for the worst. The markets were irrational and the markets were completely overreacting. And now we are getting closer and closer and closer to the reality, and people are asking questions. Have we overreacted? If we overreacted, then we need to start correcting the other way. And that is why we're starting to see this recovery in Bitcoin, touching 37,000. And this recovery in the NASDAQ, which we saw yesterday. And I think this will start closing off slightly more positive. Let's quickly go back there. Let's just quickly close some of these windows because there's a lot of windows here. So he says, last week, market participants positioned themselves for the worst week ahead of this FOMC meeting, which is a Fed meeting. The question for me this week is when do those positions unwind to play a relief bounce in risk assets? When do we get some kind of unwinding from this down that we've had, and we haven't even been able to get a bounce? We haven't had one bounce, one relief bounce in crypto. Expect the Fed not to hike this month. Instead, they will do so in the March 15th to 16th meeting. So everyone is now expecting an interest rate hike, the first interest rate hike, in the March 15th to 16th meeting. The market has predicted with a 94.4% probability that rates remain unchanged in the month of January. I think that has been our narrative all along. We're not going to get a rate hike in January. If this holds true, I'd expect Bitcoin and other risk-sensitive assets to bounce. At the same time, we must be aware that we must also be aware of the risk that the market pricing in of a no rate hike scenario is incorrect, and the Fed do hike rates this month. I think it's almost impossible that the Fed hike rates this month. But in the event that they're going to hike rates this month, well, then it's going to be a major sell-off on equities, on crypto, and anything that's a risk asset. Although a scenario where the Fed hikes rates this month is extremely unlikely, 5.6% probability, in this case, we'd get a violent reaction. We said that. The other scenario that has not yet been accounted for by the market is a double hike in March. So 50 basis points in March instead of 25 basis points in March. Currently, there's an 86.7% probability that the Fed will hike rates by 25 basis points in March. And there's only a 2.7% for a 50 basis point probability in March. And the rest is obviously that there'll be a smaller interest rate hike. I'm mentioning these pivotal scenarios as I think the forward guidance that the Fed will provide on Wednesday will impact the market the most and will force the market participants to either unwind their protective positionings or further protect themselves. So the outcome of tomorrow's meeting, super, super important. Forward guidance refers to the communications from the Fed with regards to the future course on monetary policy. So expect the speech from Powell to move the market on Wednesday. So all eyes are on the Fed to speak tomorrow. Expect the speech from Powell to move the market on Wednesday. Another potential bearish risk scenario would be signaling of an earlier QT. In other words, tightening. In other words, instead of putting more money into the economy, putting less money into, or starting to take money out of the economy. Given how equities have sold off sharply and the ongoing conflict in Russia and Ukraine, I find it hard to see a hawkish Fed, an aggressive Fed. I believe they are more likely to be passive at the meeting and signal that March will have the first rate hike with 25 basis points. And I think if that happens and we get this indication of 25 basis points, then I think that we will start seeing a bit of a rally. And I think that is what the market is starting to price in at the moment. Okay, so who is pricing in what? There are some whales right now that are pricing in this massive recovery. And you can see there's one whale or one institution. It says, stop panic selling your Bitcoin to this guy. He's buying between $2 and $18 million worth of Bitcoin every few hours. So if you're selling to this guy. And this wallet is actually now the third biggest Bitcoin whale wallet address. It's actually, the entity has finally surpassed Michael Saylor. This wallet bought 16,576 Bitcoin since the 69,000 top, now holds 125,000 Bitcoin on a cost basis of $22,000 per Bitcoin versus Saylor, which has a cost basis of $30,000 per Bitcoin. So if you're selling your Bitcoin, then you're selling it to these whales. And we're seeing a whole lot of other recovery factors on chain. So Scott Melker says, I read an incredible update from a crypto hedge fund that I'm invested in today, having their worst month ever. Their position was that we are basically in May, June, that we're basically in May, June. They are removing their hedges and going full risk on. So people are saying, okay, we've reached the bottom. The sentiment has reached the bottom, and now we're going full risk on. And you're starting to see that there's early signs that institutional money is starting to come back in. This is a tweet from Willie Woo, who's been very, very, very quiet since the market's been down, but he's now coming back and he's saying coins are moving to and from whale holders, and probably institutions are starting to buy. I got this, which was an interesting layout of countries, the big countries and the big corporates that have invested in Bitcoin and what their cost base is. And you got the president of El Salvador, Nayib Bukele, who's been buying Bitcoin naked, trading Bitcoin naked. He's below cost. I mean, his cost base is 47,750. You got Tesla at about 31,000, 31.5. You got MicroStrategy at about 30,000, and you've got Square at 27,407. So that just shows you what it looks like. Okay, there was this that I wanted to show you guys. This is quite a fascinating chart to me. Maybe it's hopium, but it was one of those charts that I really enjoyed. It says pattern, price, and time. Let's move away from price action TA charts to understand time cycles and how it works in crypto and affects Bitcoin. Writing a thread and we'll release it soon. Like and share. But what he's saying is that every cycle is about 96 days. And so you get 96 days and the price goes up. And then you got 96 days with the price coming down. And then you got 96 days with the price going up. And you got 96 days with the price going down. And he's saying, look, we're getting to, on the 25th of January, it is the 96th day. And if this is right, then we're about to go up. So there are a whole lot of signs that show that we may have hit the bottom and we may be getting a recovery. And that is the trade that I've been putting down on. I've been putting down money on the trade that at about 33,000, we bottomed. We're close enough to the bottom for me. I've started to dollar cost average. We'll talk a bit later in the show about what I've started to dollar cost average into and how I've been thinking about it. But for me, that is more or less where I saw the bottom. Now, I know that there's someone here who probably won't agree with me. And to give you both sides, I'm going to bring him on. Richard, welcome, man.
How's it going, Rand? What's going on, man?
All good. How are you, my friend? Long time. I think I need to be here in the bear market, man.
Bear? What do you mean? What do you mean a bear market? I thought we were going to 100K. That's what everyone said.
I guess we're not going to 100K this week, right? You did call the top on the day.
You may not remember this, but I called the top on the day, and it's been in profit every single day for 10 months, except for one, the Judas candle, where it made a 6% higher high. Instead of being a 65K top, it went to 69K. Got everybody long, and then went down 42%. So to replay how I got it right and everybody else got it wrong, Bitcoin was at 65K on the Coinbase launch. I said it was a buy the rumor, sell the news event. Everyone that was going to buy already bought. I called the top on the day. It dropped 55%. Then it bounced, and it went back up and made the Judas candle, the double top. And then it went down again now, 60% on ETH, 55% on Bitcoin maybe? And now we're doing the dead cat. So we're oversold.
So,
we're oversold. We're due a bounce. The RSI is under 20. It's like, it's due a bounce, but I think it's a dead cat still.
Okay, so you think it's a dead cat bounce. Mm-hmm. the theory, it sounds like we're aligned on that I'm saying that I think we've hit the bottom. We're very oversold. We haven't had any kind of relief for a long time. And we're going to start bouncing. If we were to get a bounce, how aggressive do you think this bounce is?
Well, historically, the bounces in the last bull market were about 75%. The issue that we have here is that the market isn't the same. So when we bottomed 5 years ago, it was a capitulation wick down, and then we went back up. And when we topped in 2017, the end of 2017, it was a blow-off top, and then we dumped 85%. We no longer have blow-off tops, and we no longer have capitulation bottoms because we have more limit orders, we have thicker order books, we have more trained market participants, there's more liquidity involved. And so we don't have blow-off tops and capitulation bottoms anymore. Instead, what we have is bump and run bottoms, and apparently now double tops. So I said, when we fell out of the parabola, we should drop 85%. We only dropped 55%. It went and made a marginally higher high. Now that the bottoms and the tops act different, it put double top on the plate, because double top was never something that Bitcoin's ever done before. It's never, ever done a double top before. But since it started bottoming different, that same lack of volatility at the bottom is the same lack of volatility that you can get at the top. And so I said, look, and you can check the tweets with the timestamps. Hey, look, guys, if Bitcoin double tops, at least it's not going to go to zero, you know? And that's exactly what we got. We got a double top. And now the price is down half again. I mean, Bitcoin doesn't do this. Historically, Bitcoin in the bull run from $266 to $20,000 never dropped more than 44%, not even a single time. And it went up, what, 100x, 1,000x, whatever 266 up to 20,000 is. I think it's 100x. And now the market's dumped 55% or 50% plus twice in only 10 months. This is not a bull run like you have ever seen before. This is a bear market. People don't realize that. Are people still buying $1 million JPEGs? Yes, they are. Are people still throwing money at every single stupid idea possible? Yes, they are. And what if they do raise rates? And by the way, that guy, he's quoting like what's going to happen when he's quoting these percentages of what the Fed might do. That's not what that measurement means. What that measurement means is what the market thinks the percentages are, because he's taking options and then reversing the Black-Scholes model to try and think what market participants think. But look, those guys could do anything. You wouldn't have predicted that they would just do helicopter money and send people checks directly to their house. You wouldn't have predicted that, but they did it. They just literally did helicopter money and sent checks directly to people's houses. Now, I've got $3 million of Rolexes. They're all sold out. There's no Rolexes left in the store. The rich are getting richer. You wouldn't have been able to predict that. You would have said, oh, the economy's wrecked. Nobody's got any jobs. COVID's destroyed everything. You wouldn't have predicted all the Rolex would sell out, but they did. And by the way, this worrying about macro, look, I've been in crypto since no one cared about macro. Crypto is its own thing. I think Bitcoin can go up while macro is going down, and I think Bitcoin can go down while macro is going up. I don't think they have to stay one-to-one correlated. Currently, they are, right? Ethereum is one-to-one correlated with Bitcoin currently, and Bitcoin is one-to-one correlated with the stock market, or a little bit worse currently. There used to be more diversion. Like from the COVID dip, Ethereum was outperforming Bitcoin by 3-to-1. Now, on the way down, it's basically tied, dumping the same as Bitcoin.
Okay, so where to from
for
here?
the record, if I wasn't clear, I got everything right and everybody else got everything wrong, and I want my credit, and I got the timestamps to prove it. That's it.
Look. The truth is, we can't argue with the timestamps. The timestamps are here. Here it is. Here's the first one. Here's the second one, which is why I brought you back here today, because you did call the top right. I don't think many people gave you the credit because.
It's hard, man. It's hard to take the opposite position to absolutely everyone else, but sometimes you have to.
Okay, so how important is this Fed meeting tomorrow?
I mean, for legacy markets, it's everything. So if the cost of borrowing money goes up, equities dump, and they dump really, really hard. If they keep doing helicopter money and devaluing the dollar and debasing the currency, then everything that isn't debasing goes up. So houses go up. Houses are at all-time highs. Crypto was recently at all-time highs. Gold was recently at all-time highs. Rolexes are at all-time highs. This is a $600,000 watch, and I hate it. But it's going to go up in value, so who cares? It's important for those things. But for crypto, when there's people buying $1 million JPEGs, whether they raise rates or lower rates, I still think we're due a massive, sickening dump where all these guys that bought JPEGs for $1 million get to sell the bottom. Everybody that put their money into a stupid project that doesn't have any product market fit or any use case or any users. Elon Musk needs to see what true pain feels like. Michael Saylor needs to see what true pain feels like. These dumb whales that just sit there and market buy on Coinbase from their cell phone, that don't know anything about best order execution, that don't know how to use limit orders apparently, that prefer to pay more instead of less because they think that they're pumping the price. And they are. But then you just have less coins when you're done doing that. And the pumping the price doesn't benefit you unless you're going to sell anyway. So you want lower entries, not higher entries. I don't think these guys understand how speculative instruments really work, which is why they don't have a track history of being successful traders, which is why they don't post their profit and losses, which is why they don't post their charts, which is why they're noobs. Elon Musk is a cryptocurrency noob. Michael Saylor is a cryptocurrency noob. Michael Saylor was saying that Bitcoin was going to fail in 2013, just like online gaming did. I had tons of Bitcoin in 2013. I bought at 30. He bought at 10,000. Who should you be listening to? And by the way, Michael Saylor gives financial advice like it's his full-time job. He tells you should, every single day you wake up, tell people to buy Bitcoin. It's the best thing you can possibly do with your day. Sell your business and buy Bitcoin. Get leveraged up and buy Bitcoin. Remortgage your house and get Bitcoin. And you're like, bro, you're down year over year. Everything outperforms Bitcoin, even Dogecoin that was made as a joke in an afternoon and who the founders have denounced and hate. The founders of Dogecoin hate Dogecoin, but it outperformed Bitcoin. What hasn't outperformed Bitcoin? Everything outperforms Bitcoin. Why would anyone buy it? I don't understand it. It drives me wild. You look at any chart, nearly any chart crypto beats Bitcoin.
I hear you, but unfortunately now Bitcoin leads the crypto market. If Bitcoin goes down, most cryptocurrencies are following Bitcoin's lead. So unfortunately, for now, like it or not, we have to follow what happens in the Bitcoin market.
But listen, there are currencies that don't, and you know some of them because you talk about them on your show. When I called the top 10 months ago, if you had sold your Bitcoin then and bought Hex, you'd be up 10 times your money now after a 66% dip. You would have been up 30 times your money if you'd sold the top a couple months ago. And instead, people held Bitcoin, and now they're down half their money. So you could have been up 30 or down half. That's a 60x difference in 10 months. That's reality.
So what happens?
That's real numbers.
What happens from here? What happens from here? What happens from this point on? Are we expecting?
I think that the market is going to do a dead cat bounce. I think we're going to get a relief bounce. I think the RSIs are the lowest. The daily RSI is the lowest it's been in 5 or 6 years. That's an eternity in crypto. That is an absolute eternity. We are due a relief bounce. Now, let me give you some things that could screw that up. This Grayscale Premium being negative could screw that up. Now, I saw you talking on your show. You're thinking, hey, what a good play it would be to buy this premium. Why would I buy real Bitcoin and pay 50% more when I could get 30% of discount? Those are the same equivalent. Paying 50% more is the same as getting a 30% discount.
Yes.
So why would you pay 50% more when you could just buy Grayscale? And the answer to that is the guys that thought that they were getting a good deal when it was a 10% discount bought Grayscale at a 10% discount and then watched it. They lost an extra 20% because the premium kept getting lower, the discount kept getting larger, and they lost the spot Bitcoin price going down too. So they lost twice. So if you'd bought Grayscale at a 10% discount, you didn't just lose Bitcoin going down, you lost the premium as well. It went down another 20%. You don't know how low that could go. So you could keep seeing the discount get larger, and you could keep seeing Bitcoin go down in price. And the only reason that we don't do an 85% drop in Bitcoin is maybe because they've done so much helicopter money. But to tell you the truth, to fight that, right? So there's this nuance. There's a lot of things that have to go into deciding what you think the market's going to do. And I'm an expert at this, so I'm going to tell you some of the things I look at. You guys are focused on macro. Macro is good. What about the increase in altcoin dominance? What happens is money comes into crypto. It goes into Bitcoin. Then it goes into Ethereum. Then it goes into mid caps. Then it goes into small caps. Because mid and small caps are a larger percentage of the market now, when those guys see their prices are getting annihilated and they go to sell to fiat, it hurts the market more than it would have otherwise done in the past, because there's more people going directly to fiat, going directly to stable that don't even have to buy Bitcoin to do it. Like Bitcoin's not even the reserve currency for crypto anymore. It does lead still, right? Like Ethereum dumps 1-to-1 with Bitcoin currently. But my point is, like, altcoin dominance now means that we can get harsher dips to the downside. Like, for instance, we didn't get the relief bounce we would have If this was a dump like 2017, we would have already had a 50 or 70% bounce up. We haven't,
because the money would have gone into Bitcoin as opposed to going into all the altcoins. You're saying what's going on here is,
well, now they just dump to fiat. They just go to fiat directly. Like, they don't have to get out of an alt and then into Bitcoin. They just get out of crypto entirely and go to stablecoin. So having so much more stablecoin in the market and having so much more altcoin dominance gives us more potential to the downside. And then it's harder to predict what the market's going to do now because it's less emotional, because you don't have capitulation wicks down and you don't have bluff tops now. And so it's these flat bottomed, kind of much harder to deal with prediction wise, you know. But I think it's very simple. I just watched a clip of the Tonight Show guy with Paris Hilton talking about their monkey pictures that they paid for. I just saw the president of a country FOMO buying on his cell phone, Bitcoin, and they legalized it as a currency in El Salvador. Michael Saylor loves buying higher prices. Elon Musk accepts Dogecoin for stuff at Tesla. You've got the world's richest guy, a country, celebrities. Everybody's got NFTs. Everybody's got gaming crap. I mean, Facebook changed their name to Meta based on the metaverse. Guys, it's the top. Everyone already bought. Who do you think didn't buy yet? Who's the next guy that's going to buy your bags? And when you don't have the next guy, what do you think happens? The only thing that's left is sellers. So like, and then if the market dumps, you know, you saw what happened. I mean, Bitcoin is tied to the stock market. It really is. And that Grayscale Premium is murderous. They have 3% of all the coins. They're massively important to the Bitcoin price.
So
if the Grayscale
Rich,
Premium doesn't go away, we're not going up. I'm not long term.
I agree with you. I agree with you that if the Grayscale Premium doesn't go away, we can't go up, because I think you've got institutions which are saying, look, if I'm going to buy Bitcoin, how can I justify not buying a share that holds only Bitcoin at a 20% discount to that? So until this premium goes away, this discount goes away, we're not getting, we can't get a real institutional rally because the people are there. But what's the downside of actually buying this GBTC now? Theoretically, what's happening is you're buying Bitcoin at a 20% discount today.
Well, the problem is that Bitcoin can keep going down and that discount can keep getting larger. So you think 30% down is a good deal, but maybe it goes to 50%. And then you're stuck holding something that went down twice instead of once. But I gave an example earlier. If you bought the 10% discount, if you had bought the 10% discount a couple months ago, you'd be down the Bitcoin price dumping and you'd be down the discount increasing. So you couldn't get out of your bag because you can't redeem for Bitcoin, or there wouldn't be.
But Rich, at the end point, the GBTC trust, one of three things can happen. The first thing is it can get converted into an ETF, and if it does get converted into an ETF, then the discount falls. The discount falls.
If they're gonna, if they get any, I don't know why they would. They make 2%
Work
a
with
year,
me on this.
And they're not ever going to make that 2% a year go away. So if changing it to an ETF keeps their 2% a year, sure, maybe that could happen. But I don't think that's the case. I think they have to keep that Bitcoin locked there so that you can't take it away, so that they can keep making their 2%, because that's all they care about. They care about making that 2%. So I don't think they're going to give you an option to do redemption and then take all your coins away from them and they don't make the 2% anymore. I don't think there's any way they'll ever do that.
Work with me on the options here. Option number one is they keep it running as a trust and keep on charging the fees in perpetuity.
Yes.
And that's a bad scenario because you can't withdraw your Bitcoin. There's no mechanism to withdraw Bitcoin from the trust. Yep. Option number two is that the trust is converted into an ETF because they already said that they were going to apply for it. And let's say the SEC at some point, be it in a year or 2 years or 3 years, converts us into an ETF. And ETFs don't trade at discounts to net asset value, which means that at that point in time, you get the discount back. The third option is that it doesn't become an ETF, but someone else becomes an ETF. So another
I don't think you can convert to an ETF if you have a discount. Someone has to pay the. You can't. If it's true that ETFs can't trade at discounts to net asset value NAV, then someone has to pay the penalty for it currently being lower than the asset value. I don't know, man. It's a complicated issue that revolves around what the executives at that company want to do, and whatever they want to do is make the most money. That's what they want to do. They're not trying to.
But they hold 3% of all the Bitcoin in circulation at the moment.
3%, I think. I think they're 3%.
3 or 4. They hold probably 4% of all the Bitcoin in circulation.
Could be.
Yeah, they do. All right, Rich, this is something that we have to continue, but not today because we're out of time. And I do need to get an update on Hex and
just real quick. There's $600 million of stablecoins sitting in the 2 sacrifice addresses, Pulse Chain, which you sacrificed to charity for, and PulseX.com, and nobody's talking about it. It's $1 billion raised, and it's like a secret. I think
we will get you back on, and we will have a separate show only on Pulse. And you know that we will because I invested in it. You know, I was one of the people that did pay the sacrifice.
Thank you, bro.
Cool, brother. Alrighty, so we are running out of time, but I've got Cheds. I want to bring big Cheds on, and I quickly want to look at the charts. Cheds, welcome back, brother.
What's going on, man? I'm really happy to have you here, folks. Hit that like, hit that subscribe button, give that love to Crypto Banter for providing this content.
All right, quickly, before we get into, I've got a Coinbase list that I'm going to show you guys. Before I get into a Coinbase list, Cheds, let's look at your charts and tell me what's going to happen on your charts. Are we looking for a relief bounce? Have we hit the bottom? Is it up from here, baby?
All right, let's do it real quick. If we're going to play the timestamp game, Richard Hartman, not the only one who saw it coming. October 14th, ETF run-up. I predicted the move to 64K just above. BTC, ETH, then LTC, then alts. LTC, the nut top on November 10th. That's shown for you here on the chart. We have the up thrust, the initial high, the second high failing to hold that level, the up thrust, the outside bar. All this stuff, by the way, go to the Crypto Banter YouTube. You want to check on their Trading Wisdoms playlist. There's about 13 episodes where I've covered that for you folks. All that technical analysis, it's held up wonderfully over time. We talked about the failed head and shoulders, the invalidation, the tower top, and that key 40K level. I really agree with him in many ways. A lot of people were expecting 100K, but for me, I saw we needed a little bit more measured type of moves and consolidation ran. We need relief. I agree. We're looking at a little bit of a relief rally. The question is, how strong is it? And it's important to have a perspective. If Richard Hart's perspective is it's a dead cat, you also want to mark a level on the chart where you're ready to change your mind, where the dead cat becomes a continuation. So for me, if we recapture and get back up above 40K, I think we're in good position. And you want to talk about our short-term position right now, our short-term situation. The daily chart ran. We have the 40K level. We need to flip back into support, okay? We have what just happened yesterday is called an outside bar, where the entire range of the candle eclipses the prior range. It's a momentum stalling thing. We've had incredible bearish momentum, right? We've been fading all these bounces. We've understood bears have been in control. We've understood bulls have been tired all the way down. We've talked about that. Then we get this big candle, an outside bar with a spring. A spring right here is a bear trap where you break support and you recapture it. So with technical analysis, you're following momentum and you're looking to see where momentum might be changing. You know, everybody knows we're due for a relief rally. When does it start? There's your first clue. The spring, the outside bar at the lower Bollinger. We understand from Japanese candlestick theory, we want to see our reversal candlesticks at the lower Bollinger, not in the middle, right? So we actually have a decent setup here for a dead cat. Bounce maybe up to 40K. We really want to watch to see that price interaction with the 40K level ran. But again, once again, go back to that Trading Wisdom, 13 episodes. All of that technical analysis has aged wonderfully over time.
Cheds,
great guest, free alpha. Check it out.
Cheds, zoom out on this chart because I'm not a charting guru, but I have seen enough to say that it looks like to me we're making a lower low. If I look at the first low on your chart and I look at this low, it does look like we're making a lower low here, doesn't it?
Sure, we're lower low, but where are you starting from? Clearly, look, we want to step back. We have the equilibrium pattern we went through. We have the May, April, June high. We have the low, the 80-day rectangle. Then we have the macro lower high, and then we have the higher low, which was very much a bounce right off of the top of that rectangle. It's all very simple classical charting where you have support resistance levels flipping around. You can see that, right? The resistance turned into support that we failed to hold. Where's the lower low, though? Are you going from here or from here? It's really, this is your low. This is your macro low, 30K. Yeah, right here, we're kind of pushing towards it, but it's still a higher low from the summer ran.
So what you're saying is you're expecting a relief bounce now. If the relief bounce takes us above 40K, then you're bullish again. Then you're saying full bull mode. If we break below 30,000, what happens then?
So I wouldn't say, I'll get to that. I wouldn't say we're full bull mode. We want to think about the concept of like a street light. And you have a green light, a red light that needs to turn orange before it can turn green, right? A green, red, orange. You have to go downtrend, has to go sideways before it can go back up. So the first step is essentially blunting or stopping that bear momentum. That's what we have here, okay? If we get back up above 40K, it's not necessarily full bull mode, but it's a massive reduction in bear force, which would kind of indicate you might be a little bit more risk on with your profile. We really need to get back up above not just 40K, but I think the underside of this broken channel right around 46K. Right, that's going to be really the, break here, probably some chop, break 46K. Now you're thinking about recapturing the MA50. That's a lot more bullish in my opinion. If we break 30K, we're in big trouble. Okay, I think we break 30K, we're testing 20K. And if you test 20K, we'll probably break it. But I think we might break it, then recapture it. Whatever happens. First of all, for people watching this, TA is so confusing. TA is so hard, so easy to lose money. And what I would recommend you start doing is betting less. Every trade, enter it with less money. It's going to make it easier to manage. And one really simple trick is every time you enter a position, you say, I am in this position because this level is holding. And then you're just going to decide and tell yourself, when I lose this level, I'm out. That's risk management. You need to survive. You need to thrive. You need to learn as a trader. So pick a level in the chart which you're going to say, I'm out. So if you're in here, 40K was that level. You bail out at 40K, right? So that's what you want to do. You want to start with less money. You want to define your risk and pay really close attention to these horizontal levels. Don't mess around drawing diagonals and trying to jump in too early. Make it easy on yourself. Focus on horizontals, Rand.
All righty. So, Cheds, amazing information. You're looking at let's not break 30 and let's hopefully break 40 and then reevaluate. We'll get you back when we're either touching 40 or we're touching 30. We'll get you back here and we'll talk about the next phase. And hopefully soon you're going to bring trading wisdom back to Crypto Banter. I don't think we've had a trading wisdom. We haven't had one this year, guys. We need to get one this year. We need to get a trading wisdom. Cheds, much love, my man.
Much love to the family, guys. Stay safe out there. Big Cheds loves you.
All right, guys. All right, so you may want to start positioning your portfolio for a rebound. That's what we're hearing here. Even Richard Hart saying potentially a bounce. I'm saying potentially a bounce. Cheds is saying potentially a bounce. I've showed you guys a whole lot of metrics that are talking about a bounce. Let's quickly check in on the US Tech 100. Slightly lower again. I must check my short position there. Maybe I've been squeezed out. And then Bitcoin also back slightly lower, reacting to the correction. But maybe this is just a buying opportunity. And if you are going to be buying or setting up your portfolios to buy, you need to do it systematically. You need to have a plan of what your portfolio needs to look like. We'll start talking about building a plan on tomorrow's show. You also need to look at which tokens are going to recover pretty quickly, because I think that's quite important. I said to you guys that I have a hunch for some tokens that Coinbase may be listing pretty soon. So I looked at this tweet, and I mean, this is a tweet which has a question that a lot of us have been asking. That is, how in God's name is Coinbase still listing shitcoins and not Fantom? Still hasn't listed Fantom. Then I saw something pretty interesting, and I want to share this with you guys because I think that I think I'm onto something here. I think I'm onto something pretty big here. I think I'm onto something really big here. So Grayscale made an announcement, and in the announcement they said, we've updated our list of digital assets under consideration for 2022. See what's new and learn. And they're saying that the tokens that they are considering are Algorand, Arweave, Atom, X Infinity, Bora, BTT, and they've given a list of tokens here, which includes Fantom, Engine, EGLD, Rose, Secrets, and Spell, etc. So it includes Fantom. Okay, so let's do a little bit more digging. And so now we have Woo Blockchain. Watch this, guys, watch this. So on the 24th of January, Grayscale listed digital assets currently held and 25 digital assets under consideration. These are the digital assets currently held in the Grayscale family, and these are the ones under consideration. So what did I do? I sent Carl and Luke on a little mission. And what we know for sure is that Grayscale does most of its buying in Coinbase. We know that. We know that Grayscale is one of Coinbase's biggest customers, both for custody and for actually executing trades. And so what we did here was we said, hold on a second. Let's look at all the assets that Grayscale have in their product family. So that's this bunch over here. Let's look at those ones. And then we go here and we see that they're all actually listed on Coinbase. So all the ones that Grayscale have in their family are listed on Coinbase. Aave, AMP, Basic Attention Token, Bitcoin, all these tokens that were in this list over here are all listed on Coinbase. Now the assets under consideration, which is this list over here, Some of them are listed on Coinbase, and some of them aren't listed on Coinbase. And one assumption that you can make is that if every single other Grayscale token is listed on Coinbase, and Grayscale is one of Coinbase's biggest custody clients and one of Coinbase's biggest trading clients, and DCG owns shares in Coinbase, and they're both in the United States, then what you can say is that if Grayscale is considering adding these assets and they're not listed on Coinbase yet, then these are assets with a very, very, very high chance of being listed on Coinbase. I don't think that Grayscale act by themselves and say, okay, we're going to add this token. I think they probably have meetings with Coinbase and say, look, we're thinking of adding this token. Can you do the custody for us? Can you do everything for us? And the ones that are of real interest to me are Arweave. Convex is one that is of real interest to me. EGLD is of real interest to me. Fantom, they've got to list Fantom. They've got to list Fantom. Fantom has one of the best communities in the world. It's definitely not a security, etc., etc. Near Protocol, Oasis Network. So they do have Terra Luna, but they have the wrapped Terra Luna. Then you've got Sandbox and VeChain. So here's the trick. The trick is that if you want to know what is going to be listed on Coinbase, just go to Grayscale. You know that all the Grayscale tokens are all listed on Coinbase. Look through the list. We've made this list. I'll publish this list on our account on what's that platform called? The one BBS account. I'll publish this list on the BBS account. And you guys can see the ones that I think are going to be listed on Coinbase. Coinbase is aggressively adding a whole lot of tokens, and these are the ones that I think are going to be listed pretty soon. So that's just one way of looking at it. I hope that you agree with me there. All right, what else? Let's quickly take a last look on the markets before we leave. Last quick look. Let's look. Okay, so let's look at the NASDAQ first. It's pretty stable. I mean, it's 14,100, 14,200. It's going to move sideways. And as it moves sideways, I think Bitcoin's going to move sideways with it. That's where it is until the Fed's meeting tomorrow. We'll keep you updated on the Fed meeting tomorrow. My best advice to you is, right now, there's one place that you have to go. Bang. Here we go. Go to the Crypto Banter website. Sign in with your Twitter. Already, you see, so already there's an article around 6 tokens for gaming recovery. We haven't even spoken about it. It's probably going to be on Hustle Show. And already, it's not here. We're also seeing, there's an article here that's showing you 5 signs of a recovery. Let's actually look at that article. I want to know what the 5 signs of recovery are. Let's quickly look at it. You can see it's a Twitter type experience. So you've got the Gareth Soloway tweet here. You've got Matty Greenspan's tweet. Okay, so there's 5 signs here of a recovery. We'll have a look at that. To be honest, I haven't read this article. This article's posted while we were on the show. But there's a whole lot of great alpha on the Crypto Banter website. Get the alpha on the Crypto Banter website. I will see you guys again tomorrow. Keep following my Twitter. Keep following the Crypto Banter website, because that's where we're going to break any news that is related to the FOMC meeting that may happen before the show, if there is any news. See you guys again tomorrow. Until then, trade well, my friends. There's going to be a big in the game later. We should watch the in the game. I think Hustle is going to talk about 6 gaming tokens. Now, he's spoken to me about 3 of them, so I know 3 of them. Yeah, it's going to be huge.